So, if you're running a business or even just a side hustle, you already know that making money is only like half the battle. The other half, well, that's managing it, protecting it, and knowing exactly where every single dollar is going. Today, we're going to break down the essential banking procedures that are really the foundation for keeping your business finances under control.
Let's just start with the biggest question of all. You've made the sales, the money is coming in, which is awesome, but now what? How do you make sure all that hard-earned cash is actually safe and accounted for? Honestly, this is one of the most fundamental challenges every single business owner has to face.
And really, this is the heart of the whole problem: physical cash. It feels great to hold, but it is, without a doubt, your single most vulnerable asset. Think about it. Unlike your computer or your inventory, cash has no name on it. It's totally untraceable. It can vanish in a second from theft or just getting lost or even simple mistakes.
So let's just start by agreeing on this one thing. Cash is, by its very nature, your riskiest asset. And just understanding that, just accepting it, is the first real step toward building a system to control it, whether you're dealing with actual paper money or digital funds.
Okay, so how do you protect yourself from that risk? You wouldn't leave the front door of your shop unlocked overnight, right? So you shouldn't leave your cash unprotected either. It's time to set up your defenses, to build kind of a financial fortress around your money, using a few really smart, simple procedures.
Now, the official fancy term for this fortress is internal control. I know, it sounds super complicated, but it's really just a set of rules that you create for how money gets handled. And the cornerstone, the absolute foundation of any good internal control system is something you probably already have: a business checking account. Everything else is built right on top of that.
And check out how these simple rules work together to create a really powerful system. Depositing cash every day, that minimizes how much physical money is just sitting around. Making all your payments by check, that creates a perfect paper trail. And dividing duties means that no single person has too much power. It's all about creating checks and balances.
All right, let's get to the fun part: getting paid. But we need to make sure that when that money comes into the business, it happens in a really secure and documented way. This isn't just about collecting the money, it's about processing it the right way from the very first moment it comes through your door. And believe it or not, it all starts right here, with this little guy, the humble deposit slip. It's so much more than a piece of paper. It's your first official record of that money. You can see the date, a clear breakdown of cash versus checks, and then that final total. This little slip is how you turn loose, vulnerable cash into a formal, recorded transaction.
Now, if you're depositing checks from customers, there is one super critical step you absolutely can't skip: the endorsement. By signing or stamping the back of that check, you, the payee, are officially giving the bank the right to move that money. But how you endorse it, oh, that matters a lot. First up, you've got the blank endorsement. This is just a simple signature on the back. Yeah, it works, but it's pretty risky. Think of it like pre-signing a blank check and then walking around with it. If you endorse a check this way and then you lose it on your way to the bank, whoever finds it could potentially cash it. Not great for a business.
A much better option is what's called a full endorsement. See here, you're not just signing it. You're writing "pay to the order of," and then you name your bank. Now that check is specifically pointed at your business account. This adds a really powerful layer of security and directs the money exactly where it's supposed to go.
But for any business, this is the one. This is the gold standard, the restrictive endorsement. By writing or stamping "for deposit only" along with your account info, you make it physically impossible for that check to be cashed by anyone. It can only be deposited into your account. This is, hands down, the safest way to handle every single check you get.
But of course, let's be real, it's not all about checks these days, right? A lot of money comes in through credit cards, and while that's super convenient for your customers, it comes with a little catch for you, the business owner. For every single transaction, the credit card company takes a small slice, a percentage, as a service fee.
And this is exactly what that looks like on your books. So you made a $100 sale, right? But then look, there's that service charge expense. In this example, it's $1.50. So the actual amount of cash that gets deposited into your bank is only $98.50. That fee is a real business expense you have to track. Simply put, a $100 sale did not put $100 in the bank.
Okay, so we've buttoned up how money comes in. Now let's flip the script and talk about money going out. Because controlling how cash leaves your business is every bit as important as controlling how it comes in. To really get this, you gotta know the three main players in any check transaction. When your business writes a check, you are the drawer. Your bank, the one that has to pay the money, is the drawee. And the person or the company you're paying, they're the payee. Every single check involves this little three-party dance. So let's zoom in and really look at a standard company check, because every little part here has a job to do. That check stub over on the left, that's your private internal record. Then on the main part, you've got who you're paying, the date, the amount in numbers, and written out in words, and of course, that all-important signature. Every single one of these fields is part of the control system that creates a clear, verifiable record.
And here's a super important pro tip you absolutely cannot forget. If you make a mistake, and the numbers you write in the little box don't match the amount you write out in words, the bank will almost always honor the written words. That's why being precise is so critical. The words are generally considered the true legal instruction.
So, we've looked at money coming in and money going out. You might be thinking, wow, that's a lot of little steps. So why do we go through all this trouble? Well, it all leads to one single ultimate goal: creating a perfect, crystal clear picture of your company's financial life. And this is the payoff. This is what you get for all that effort. A clean, simple record showing every deposit that came in and every check that went out. You can see your total income, your total expenses, and the balance. This isn't just boring bookkeeping. This is business intelligence. This kind of clarity is what you earn from having disciplined procedures. At the end of the day, it's pretty simple. What might feel like a bunch of tedious rules, filling out deposit slips, endorsing checks the right way, writing payments carefully, those are the very tools you use to turn what could be total financial chaos into absolute financial clarity. So we've walked through the fundamentals of controlling your cash. From making daily deposits to using those restrictive endorsements, these are the basic building blocks for a secure business. And I'll leave you with this question to think about. Looking at your own business, what's the one single most important step you can take starting today to make your own financial fortress just a little bit stronger?